Hello and welcome to the Genuine Learning Blog. My name is Melissa Galasso, and today we're going to continue our discussion of NOCLAR. So last week we talked about the Auditing Standards Board's proposed SAS, which addresses NOCLAR and the requirement to contact the predecessor auditor if permitted by the client to find out about any issues related to NOCLAR. Now we're going to talk about PEEC, or the Professional Ethics Executive Committee's proposal, and this will end up as an ethics interpretation. So they were proposed around the same time. It was intentional, the conversations that were being had between PEEC and the ASB, and this is really part of a much bigger project. In fact, this is the second round of comments that we'll be providing on NOCLAR from an ethics perspective. The AICPA does not currently provide any guidance for members who encounter issues related to NOCLAR, whether that's non-compliance with laws or regulations or even suspected NOCLAR. And the examples that they provide in the standard would be fraud, corruption, bribery, money laundering, securities and markets trading, banking services, tax and pension liabilities, data protection, public health and safety, and then environmental protection are all the types of non-compliance with laws and regulations that they're considering in this project. So let's take a look at the proposal. So again, this was issued February 25th, comments due June 30th of 2021, and it is a convergence project. Now, if you think about this, AICPA has obviously worked on this, and this is the second proposal. The first proposal came back or was issued in March of 2017, and we provided feedback, and there were a lot of comments and questions about things. Now, I will say it wasn't like a million people responded, but of the ones that responded, there were a lot of concerns that were raised by those respondents, and they typically related to client confidentiality questions, as well as competitive disadvantages for those that would be providing non-attest services that were subject to the standards than other entities that would not. And so those were the two big areas where they focused on. So let's take a look at the definition of NOCLAR. So non-compliance with laws and regulations comprises acts of omission or commission, intentional or unintentional, that are contrary to the prevailing laws or regulations and are committed by a client or by those charged with governance, by management or other individuals working for or under the direction of a client. And we're going to talk a little bit about that definition of a client, which is one area they did address in this proposal. So why do we care about NOCLAR? Very similar to AUC 250 when we talk about compliance with laws and regulations, non-compliance can lead to fines, litigation, and other consequences that may impact the financial statements, right? And they can be very large fines in some scenarios that could be material to those financial statements. In addition, other types of non-compliance could have public interest implications. And so it doesn't necessarily have to have a large impact. It could just harm investors, creditors, and public employees, or the general public. And so when there's a serious adverse consequences to any of those, whether it's financial or non-financial, then we would be in here. Now, they do clarify that if you come across something that is clearly inconsequential, then you would not be required to comply with this. It has to be something, obviously, that has some element of materiality to it. One area that they did make changes to is applicability here. So this interpretation does not apply to personal misconduct unrelated to the business activities. So it wasn't done in the course of business related to business environment, then that's not going to not be part of this interpretation. Non-compliance by parties other than by the client or those charged with governance, management, or other individuals working for or under the direction. So vendor, for example, would not necessarily qualify. An additional one that was, I think, addressed through the comments that were received is any litigation or investigation in services that are done under the Statement on Standards for Forensic Services. And so litigation investigation, obviously, the information that you're coming across there, we have to worry about privilege and other things. And so those are excluded. And then an engagement pursuant to which the protection set forth in the IRS Code Section 7525, in those scenarios, those would also not be subject. So they did add some additional scoping here to really focus on where they were trying to go. So what were some of the changes that were made from the 2017 revision to the 2021 revision? Well, the first thing is that before, all members in public practice were treated the same. So if you were in public practice, it didn't matter if you were doing an audit or if you were doing an attest service, an AUP. And so what they've decided to do now is that if you're in public practice, there is a separation between attest versus non-attest providers. So if you're not doing an attest service, then, if you're doing a preparation or any other non-attest service, there is a different level of requirement than if you are an attest provider. The term client was also clarified to be the engaging party if it's different than the subject entity. So we talk a lot about in the attest standards, the responsible party versus the engaging party clarifies here again that we're talking about the person who is engaging you, not the entity that we're performing procedures on. As I mentioned, it excluded more topics, for example, litigation being one of the big ones that was brought up in comment letters. It also makes an amendment to the client confidential information rule. So again, addressing some of the issues that were identified, it adds compliance with professional standards. And so remember, the ASB just updated or just proposed the successor auditor element. So now in this scenario, you would be still compliant if you were complying with those professional standards. So that was an intentional adjustment. Other areas where they focused on were members in business. There are two levels, which they did have in the original proposal for senior professional accountants and then other accountants. So depending, those who are senior have the ability to, they have responsibilities. They are able to use their position to make change. And so there's different levels of accountability. However, they confirm here that if you're a member in business, NOCLAR applies to you. This is not just for the external auditors in the house. If you are part of a company and you know that there's non-compliance with laws and regulations, you have the ability to communicate NOCLAR to regulatory ethics, unless obviously prohibited by laws and regulations. Obviously, the client confidential information rule that applies to entities in public practice has a little bit of a different spin to it, because again, we have to think about when we're doing our work as the auditor and we're external, we have to follow the client confidentiality rule. If you're internal, obviously you start with your internal work, report through the hotline or go through your chain of command, go to your boss, etc. But the communication's there. They also add the term credible to clarify the level of information obtained. So it doesn't have to be actual, right? It could be suspected. And so when you're evaluating the impact or evaluating the accuracy, right, it does have to be credible information that's been brought to you. They also replace the term may occur, which could be, more options there, to likely to occur. So kind of, narrowing the scope to some extent. And then it requires both the senior professional accountants in business and other accountants in business to disclose NOCLAR to the external auditor if they believe that that is necessary. So again, as part of this, there would be, and that was in the original proposal for a lot of this as well, but it was different levels of responsibility. All right, so let's talk a little bit about client confidentiality. So when responding to noncompliance or suspected noncompliance in the course of providing a professional service to a client, the member should consider the member's obligation under the client confidential information rule. You should not disclose the compliance or suspected noncompliance to a third party without client's consent unless expressly permitted under the confidential client information rule, such as when reporting the noncompliance or suspected noncompliance to a regulatory agency in order to comply with laws and regulations, or here's that addition, compliance with the professional standard. So when we think about this, they add that additional element in line with the requirements that they're adding on the ASB side. So this all does work together. This is a really long proposal. So if you haven't taken a look at the 2017 proposal, we really focused just on the changes from the 2017. If you are not familiar with the 2017, I do recommend that you take a look at it. It's very long. It addresses CPAs in public practice as well as those that are in industry, and it does provide attest versus non-attest differences. So we do want to make sure that everyone's aware of some of the concepts that are going on. So hopefully that was an overview that could be helpful. Again, they are looking for comments by June, so hopefully by then we'll be out of one busy season and into the next one for our nonprofits and governments. But hopefully you'll have an opportunity, if you see any fatal flaws, to provide feedback, because this is a hot topic. It's a slightly controversial topic. And so I would recommend that if you see something, say something, because this is something where they really need to be making sure that we don't accidentally cause a problem for those in public practice or those in industry. Thank you guys so much for joining me, and I hope to see you on a future blog. Have a great day, guys. Bye-bye.